afternoon and welcome to the Blue Line Metals Edge here for Wednesday, January 25th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. As always, if you need additional information on futures and commodities, be sure to go to our website, bluelinefutures.com, click on Research, and subscribe to a free 2-week trial of our research. You put in your basic contact information and then select the reports that you like to receive. Additionally, if you haven't been to, go to Blue Line Futures under our YouTube page and make sure you like and subscribe to our videos here. It'll help YouTube grow our channel and also spread the word out on some of the things that we're looking at. Now, getting into the metals here today, if you look at silver, it's still trapped in this range here. This is a daily chart going all the way back from about October, mid-October. This was when you got your breakout really to the upside in November. This was, I believe, an FOMC meeting or a CPI report that got the party started. You got a couple follow-through trades here. But, you know, since basically mid-December, we haven't seen much action at all. So I think silver's going to kind of work its way back up and maybe ping pong back and forth here. This, though, is a critical level of support. So we'll be sure to be buyers on that first dip, that first test. You know, the markets don't like to leave these wicks open here. They like to come down. They like to fill them out. So if we do get that pullback, we'll look at getting long back down in this region, back below $23. Now, Gold's looking pretty good here on the chart, I have to say for myself. I thought that it was going to go into this consolidation zone, which it may be, but I've been really paying attention to this upward trending line here, seeing if we're going to bounce off and if we're going to extend higher. I think a lot of it's got to do with the dollar index. Currently, the dollar right now, 101.46. It's down about 21 points at the moment. So that weakness in a dollar is really what fueled gold's rise here today. Looking at the platinum market, that's another one that, you know, I was saying yesterday on here that it kind of is in this area where it's either going to consolidate upwards or it's going to come back down and it's going to fill in this consolidation zone. So with it being right on the fence here, I did recommend that a lot of people get out of those positions yesterday because of the fact that it just looks like if you caught this move up, or anything that was like on the tactical insights where it did trigger the first long, you know, you're going to want to tighten up that stop. So you don't want to see that market really close down in the 1030s for more than an hour. It could be setting itself up for another big sell-off. Now, the markets today, the stock market was really kind of volatile, and it all started yesterday. It was after the close, you had Microsoft report earnings. And if you look at Microsoft, this is when they go and they reported the earnings. This is like right at the closing bell, and you can see where we opened. We had gap lower significantly. We had sold off. This is when U.S. equities were making their lows on the day. And then since then, Microsoft has basically come up and pretty much filled this gap here. And now it's just kind of going sideways at the moment. So if you look at U.S. equities and you break it down, you can see that it's still under pressure because there are a lot of different stocks that are still have to report earnings, are still big laggers out there. But you can see since the sell-off, we got down in the mid-39s. We've been rallying back the rest of the day. We do have Tesla coming out after the bell, so that could be another flyer on the markets. You know, you get into the NASDAQ, same thing on this chart. What I don't like about the NASDAQ, I think it's a lot of profitless tech. I think that the tech is going to be impacted by, you know, these higher... not necessarily the higher inflation, but the higher borrowing costs. A lot of those companies, you know, do utilize a lot of borrowing, are very susceptible to higher rates, and that impacts their profitability. So if you look on the NASDAQ, we came right back up and we kind of retested this zone that we've seen a few times. And if you look at this chart, we really could continue to correct down, and we could go down and make new lows on this chart. So I do think that, you know, you start getting down into this area, that's going to be a critical level of support that about 10,800. But I also think we're running into some major resistance as well on these levels. A couple markets I'm keeping an eye on. Cotton, it looks like it's setting up to break out to the upside. It hasn't done it. It's tried it a few times. It did trigger a long on this move upwards on the breakfast report. So we're keeping an eye on it there. If we get much of a close below, you know, say the 82 level, we'll want to run for the doors. But I really think that that's another market that could potentially break out to the upside, and you could continue to see it run quite strong. So other than that, Market-wise, again, they're trying to grind those U.S. equities back higher at the moment. All your grain markets are a bit mixed. Your currencies, all the foreign currencies are up because of the dollar weakness at the moment, and your metals got a bid on that sell-off in the U.S. dollar. So if you have any questions, futures option trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.